Well, James, we're seeing the rand trading around 754, 755 at the moment. We had that news out this morning about Dimension Data and being bought by NTT of Japan. Is that, do you think, providing some support for the rand? Because we are still seeing this ongoing volatility on the markets.
It certainly is, yeah. It's good positive news. The rand is certainly benefiting from the Dimension Data story. The question is how much of that rand and the timing of which, how much of that the dollars come into the market, should I say. So we can look into that, and it's expected to be around 3.2 billion, the size of that sale. So the market obviously is looking closely at that.
Any idea of how much of the proceeds will come to South Africa? Because of course Dimension Data also listed on the London Stock Exchange.
That's right. Studies look to show about 50%, maybe a little bit more than that. Two major shareholders being some funds locally holding that. Whether those shares are held in the local exchange or offshore isn't totally sure, but we're making it around just over 50% of that should come through.
Of course, Data talking about that deal being concluded by October possibly. Of the money that could come to South Africa, where would it go? Would it go into our reserves, and would that support the rand?
Yeah, that is also the question. But in both cases, you could expect that to support the rand. Obviously, increased reserves beneficial as well. That is, yeah, it is far down the line. How much of it comes through is important to ask, and yeah, the answer to that at this point is unclear.
I think we'll have to keep on watching that one. In the meantime, we had retail sales out yesterday, James. 4.6% growth in May. And of course, the market was looking for a figure of about 3.5% or just shy of 3.5%. So some good news on the retail front.
That's right. Yeah, it's the market certainly reacted accordingly, and yields moved up as we've been expecting. In the previous data releases, we've seen greater chances of a rate cut coming through. The retail sales just perhaps calming those, the aggressive thoughts down a little bit. If you look deeper into the retail sales number, though, you find that it's May's figure. It's ahead of the World Cup. There will be a lot of pre-World Cup spending, so it is going to include some of that. Also, last year, 2009, was an incredibly low retail year, so we're coming off a low base. So yes, the numbers improved and better than expectations, and we expect that to continue through June and July, obviously with the World Cup. But further down the line, it's expected to dip off a little bit.
And of course, we also had seasonal changes because it was the beginning of the winter season, so also difficult to compare with previous months, isn't it?
That's correct, yeah. Obviously, you'll have the associated seasonal purchases. That's worth mentioning. It's also worth saying that the National Credit Regulator released some figures yesterday, pointing towards the level of consumers borrowing in the country at the moment. Only 54% of those are in sound credit condition. So that's quite a concern going forward, depending on how much of those sales are being funded over terms. It's also worth looking at the fact that they pointed out 78% is the household debt to income ratio at the moment. So that will be a concern also for the Reserve Bank, and a consideration for them whether they would need to perhaps ease some of those repayment conditions at the MPC.
Well, as you said, yields on bonds rising a little bit this morning after those retail sales figures. What's the market pricing in for an interest rate cut now? Could we get one this month? Could we get one in September? Because we had Jill Marcus last week speaking, the Reserve Bank governor, and she seemed quite dovish and quite concerned about what's playing out in Europe.
Yeah, I think if there was anything to get from Jill Marcus's comments, different to what has been said before, is certainly the concerns around the international economic conditions. With Europe being our major trading partner as a group, she mentioned that their demand for our exports will be depressed. And I think if you look at the rhetoric coming out of international central banks, it is for low interest rates for longer. More stimulation is required, and I think if anything sways the governor next week and the MPC, it will be considering those international points of view on interest rates.
And of course, inflation doesn't appear to be a problem or even be becoming a problem at the moment. We had an operational update from ShopRite this morning, and that pointed to quite low food inflation.
That's it, saying in that report by ShopRite that for the first 6 months, although sales have improved, the actual food inflation level they've seen at 0.2%. and that obviously that's about 15% of the CPI basket. More importantly, it's a greater percentage of the lower income consumers in the market. So that really does point to a lower inflation environment going forward.
You talked about low interest rates for some time to come. We had the Federal Open Monetary Committee last night releasing the minutes of its June meeting. We're also concerned about Europe, and that's something that it said at the end of that meeting last month as well, but also indicating that more stimulus might be needed in the United States. What are you making of that?
Yeah, well, they don't really have the bullets as far as interest rates are concerned, like perhaps South Africa does. They're sitting at 0 to 0.25% at the moment, so more stimulus would be in the money markets and perhaps supplying more liquidity there. But certainly they all pointed to Europe being a major concern, and as a result moving down their growth and recovery expectations. There are concerns over inflation and whether it will start picking up, many concerns about it actually becoming a deflationary situation in the US. So we can see the market is actually focusing more on the US economy in the last few days than it has been on Europe, and that's evident in the currency cross prices that we've seen of late.